Welcome, everybody. Welcome, Kipp and Michael. Many thanks for joining this Trader Chat interview. You're both successful and consistent traders, and you're a great role model for everybody else.
Hi Gabriel, it's nice to be here, and it's great to talk about my journey because in literally around 5 months, I've gone from a novice to being consistent, and it's been quite an interesting journey. So it'll be great to share that.
Yes, and it's a pleasure to be here. Thank you for having this discussion, and it's really nice to be visiting with Michael as well.
Yeah, let me just introduce you, Kipp. You're a retired lawyer, and you're now a full-time trader, right? Living in the US, in Nevada. You're with our community for about 2 years. You're trading Forex and futures. And now you have grown into a trader. You very consistently, you trade a real money account, now working on increasing your position size. Um, Michael, you are 17 years old. Well, you can see you're still young. You still go to school, actually. You live in the UK and you trade after school. As you mentioned, you've been a complete novice, right? And that's the interesting part. And now you're very consistent. You're rolling a big R results, and you're trading with a proprietary trading firm, right? So you're trading the firm's account. We're all trading these visual price action patterns with the three systems, but we're all very different traders too. How would you describe yourself? I mean, what type of trader are you, Kipp?
I'm basically a fairly slow and patient trader. I'm not looking for big scores. I tend to do trading 5 days a week, and I'm trading full time. Typically, when the US market closes, then that's the end of my day, and I stop. I found that over these last 2 years, I really end up trading the S1 patterns, both in future, S1 and S2 patterns in both futures and Forex. And I'm looking to develop that further to look for S3 patterns in the future. But that's my main trading area right now.
And what is your main focus of trading? Like, on which time frame do you trade the patterns?
I am trading mostly shorter term patterns, the 1 minute, 5 minute, 15. Those are patterns that I feel fairly comfortable with, and you see the price action develop fairly quickly.
And what about you, Michael? What type of trader are you, would you say?
Well, starting off with a personality type, I'm definitely like a strong type A. And straight away, when I started trading the live markets, I had quite a bit of FOMO, as you probably saw in my trade logs. And that journey sort of went along of getting rid of FOMO. And I'd say now I'm sort of more on the patient side, and I'm more thinking about the risk rather than just the reward. And I reckon I'm starting to get a great balance between the two. But that comes with like it comes with practice, and it comes with the right guidance. And I feel like having that has really helped me. I mainly
And with
trade on odd time frames as well, as you say. And I like to trade S2 mainly.
you started to look at the crypto charts, right? The patterns on the crypto charts, Michael, just
Yeah.
recently. So what did you find out?
So on the main crypto, a lot of the S1 patterns do come up, and they are quite reliable. I look at mainly the 4 hour and higher time frames for the crypto. And yeah, they've worked really well. There've been lots of entry signals, even at the low prices, around 30K for Bitcoin, and they've worked nicely. Even with the altcoins and the meme coins as well, where the market cap is really low, S1 comes up a lot, and it shows the thought process behind the pattern. It works for everything, and it's a really good system.
The crypto charts are clustered with patterns.
Yeah.
Let's come to trader development, because I mean, you both have developed, right, into a successful and consistent traders on your terms. Um, what do you think is most important when you think about trader development, Kip?
There are two aspects that I think of. The first is really psychology, and that was a big development area for me, and developing the ability to recognize yourself, understand your own behaviors, your own belief systems. And so that was an area of real development for me. But the other part really has to do with learning how to do the mechanics of trading. And that's where the simulations and the deep practice really came into play. And you really need to master those tools. And it's a matter of doing it repetitively and starting to understand how you can recognize the patterns and then implement the trading process. So there's a mechanical aspect, but overall for me, what has now become paramount is really psychological matters.
Okay. When I understand you right, in the beginning for you, really important was applying the tools, right? The simulator and the practice, like going step by step in a very consistent and structured way. And then later, as you're more and more matured, well, then psychology plays an important role, right? Yeah. Well, this is how the programs are structured as well, right? In that sense, yeah. What helped you most, Michael, in developing? I mean, we're looking back like 6 months, 5, 6 months. What helped you most during that recent time?
I'd say a combination of having the successful trader examples from your community, like having some of the trade logs on YouTube really helped me um, see how a mature trader does trade. And whenever I might have been in a dip, those trade logs would also give me encouragement to keep going and to reassure me that it's very much possible because people from the same process have succeeded, and I just need to keep going and keep following your guidance. And I agree with everything that Kip just said as well. And I think that these systems, they're a great foundation for trading, but you can also develop your own style and your own niche within them. And I feel like for S2, I've taken your rules and also added some extra things of my own that I've found out through the development, and it works really, really well.
Great, yeah. What do you love about trading? I mean, how did you come to trading, Kip? You just retired, or you started to trade before you retired. So what do you love about it?
I started trading many years ago when I was practicing law, and back in the days, almost pre-computer. So that gives you an idea of the time frame. But that was a very mechanical process, and mostly trading stocks and bonds a little bit, but stocks and options. And so that process was very much mechanical. It was based on pattern recognition, but what I really learned over the process in the last 2 years is the idea of going ahead and really moderating the psychological side and really learning to use that tool better. And that's been a real journey for me. I think active trading is very hard to do successfully if you don't really understand your own belief system and you really don't understand your own psychology. It's so easy to get taken away in the trading process and let greed and FOMO take over. So for me, that became a very important element in the process.
Right, yeah. Now that you have become retired, how do you perceive what is trading for you? Is it a hobby? Is it an extra income? Is it something you really want to master now? You have more time.
Yeah, it's interesting. It's certainly not a hobby. I spend a considerable amount of time doing it. I take a lot of joy in just looking at the patterns and implementing the trades. So there's a degree of real joy in doing that. But I also think it's really not about the money. For me, that's been a very important element. I'm not looking to trading as a way of measurably improving my lifestyle or anything of that sort. It's really about the process itself and enjoying that process. Money is an aspect of it, but it's not the driving force. And for my psychology, that's somewhat important so that I'm not concentrated on the return as much as I am just implementing the trades properly.
Focus on the process is anyway the right thing to do, and not the outcome, right? Not the dollars. So you're in a great position, yeah. Michael, what about you? I mean, especially the people of your age type, right? I mean, they are thinking get rich scheme. Trading is a get rich scheme easily and quickly. What do you think?
Yeah, unfortunately, I got into trading probably the exact opposite to Kips, and Kips probably the right way. But for me, like many people, you'd hear people talk about trading on like social media or whatever, like the amount of money that they've made from it. and you'd hear it, you'd think that is a really great way to get rich. But I was playing tennis, and I was lucky. My friend Paul, he recommended me to you. He's in your master's class for futures, and yeah, that's really how I got into it properly, because I didn't really know where to start. So yeah, although like I had the perception that trading was sort of easy at the beginning, then I got led to you through my friend Paul, and then like I realized the proper process and how consistency is the most important rather than the number of hours that you might get.
That you have to put some time and effort, right, to learn it and to develop as a trader. Okay. Let's come to the patterns themselves, trading them. I mean, these systems are counterintuitive. Well, they have got a clear set of rules, but they're kind of counterintuitive visual price action patterns. When you look at the markets, Kip, do they come up repeatedly for you, these patterns?
Oh, they do. Absolutely. And I'm able now to see them fairly clearly. The plurality of those patterns sometimes is very helpful as well, and looking at different time frames. So it took some doing and some time, and that's where the simulation and deep practice comes in. But eventually you get to a point where you can fairly quickly scan the markets and recognize the patterns, and you do see them coming up. It's a interesting process, and there's a lot of joy in finding those and seeing them now.
You have the experience that some days are really good for, like on the 1 minute charts, like the patterns come up there. Other days there's nothing on the 1 minute, it's more on the 5 minute or the 15 minute. How do you perceive that?
Yeah, I do find that when that happens, I go back and I scan and I look for other pairs, other opportunities. And in my case, sometimes I'll then switch and take another look at the futures market. So I'm switching back and forth a little bit during the day. And if something is not working out, I don't push it. I look for another opportunity. And the process of switching between Forex and futures is an interesting one as well. That's taken some time to learn, because you have to adjust your mindset as you go back and forth. But I'm constantly looking for patterns, and I don't get frustrated or fixed on one particular pair or one particular screen.
And if there's no pattern on a given day, it's not a problem either, right? Because we've got a weekly target, and it doesn't mean that we have to trade every day, right? Some days are more active, some days are more quiet.
Absolutely. I mean, that's essential to recognize, is that sometimes the market is giving you the patterns and you're seeing them and you can execute. Other days it doesn't. And just not forcing it is so important. It's not about being here and making trades. It's really about finding the patterns and seeing the opportunities.
It's about letting the patterns come to you, right? Not chasing them.
Very, very true.
Yeah. What about you, Michael? Seeing the patterns in different time frames?
Yeah, they come all the time. Like I see it on every chart, no matter what it is. And I think it gets to a point where there are so many. As you get better, it's more about choosing the right ones to take rather than a lack of opportunity. And I think that on all time frames, the patterns come, and it's just about whatever time frame that you like to trade, and based on your trading game, what you can trade. I think for me, if I don't see the patterns in my preferred time frame, let's say I prefer the shorter time frames and they start coming up on the 4 hour chart, I become less comfortable. Although there are many traders from your group that are more flexible, for me, I choose to stay out of the market, and I'll wait for patterns to come on a lower time frame, and they always do. We have so many pairs as well that we can trade for Forex, and there are so many opportunities. So yeah, that's really great.
Right. We want to be really selective with quality, right? Only take the very best trades, the no regrets trades, and let the other trades taken by somebody else.
Yeah.
Let's come to the exits. I mean, we apply a very specific exit algorithm, exit rules. What do you think, Kip? What is more important? Because there's always discussion about it. What is more important? Is it the entry or is it the exits?
That's an interesting discussion. I would argue in a way that the real R's are made in the exit strategies and how you exit. On the other hand, to answer that question, if I were forced to make an answer, the entries are so critical because you need to be trading the right patterns, the ones that are no regrets. And so that entry is critical. And then there's the period of time before you meet a point where you can break even, reach a 1.2 R level, where you're at risk of losing capital. And so the proper entry and finding the right trade is really critical to at least meeting that threshold. And once you've met that, then you can go ahead and apply the exit strategies. I tend to keep to the exit strategies rules pretty rigorously unless I can find an overriding reason to change it. And sometimes intuition comes into play and I can feel that an exit makes sense. But usually I'll apply the rules and let them just play out.
Yeah. Well, traders in our group apply different on the personality and the type of trader. Apply more or less intuition on the entry, or more or less intuition on the exits, right? Like you, Michael, you're a good example of applying quite some intuition on the entries, right?
Yeah, so like whenever I see what I'm looking for, then I'll choose to enter. And I guess that sort of intuition as well comes from looking at lots of the trade examples, the screenshots, and all the resources that you give us. There are so many. But then I think from what Kip said as well, I really think that although they're both entry and exit are important, I think the exits are perhaps arguably more important because you've got to let your winners run as well. Like everyone's going to have losses. And if your losses and your winners are very similar, well, then you're either break even or negative. So being able to let your profits run. And that's the great thing about the exit strategy that you've given us as well, because it really allows you to maximize your profits and then preserve your profits once you have them. So that's really worked well.
Yeah, human psychology is not really made to execute a successful exit strategy, right? Without rules. We want to cut profits and let losses run, and we should do the exact opposite. Yeah, exactly. For all the three systems, like one of the core things are that the stop run levels, right? And then what comes out of if a stop run level gets run over, well, we get a stop run move. Could you explain what that means or what that feels or looks like, Kip, for you on the chart?
Yeah, really, the stop run levels are really critical. And essentially, how I view them is almost like putting a map on the chart and getting an idea of where price may go. And so you can start to get a feel for the market and you map it out as you're watching the trade develop before you get in. And then once you're in the trade, then you can see it happening. You can see price move in a particular direction towards a stop run level where it may meet resistance and not break through, or it runs right through it. And you see the price action almost accelerate after that. So it's a wonderful tool to learn to do that and implement that, because you almost have a guidepost for how the trade may develop, and it gives you some parameters that help you kind of see where the trade may go.
I think, Michael, you're using stop run levels as well on higher. When we have got them within the pattern itself, the time frame we execute, but we have them as well on higher time frames. I think you put quite some attention on those higher time frame stop run levels, Michael. Do you?
Yeah, I do. I spend quite a long time analyzing the higher time frames, and on all of my charts, I have everything labeled out to help me. And I think those stop run levels, they're really, really crucial in, I think, understanding just beyond the lines and the bars and the candles on the chart. But you start thinking about how other traders feel and the situation of other traders. And I think it helps you develop a really good understanding of why price moves as it does. And like the fact that from day one, I've thought like that using like these stop run levels, I think that's really helped me over these 5 months to really gain a great understanding of why price moves in the direction it does.
Yeah. So for some people it takes them 5 years, right, to understand things. So we get quite some novices in the workshops, and they can do pretty well early on. So you're a good example. Kip, what do you think? What is the main edge of the systems? There are many edges, but what is for you the main edge?
I think the main edge really has to do with, first of all, recognizing when to get in. And the higher time frames really are critical for seeing that and seeing the overall development of the trade and how it's playing out. In very, very simple terms, we could describe it as a hockey stick in many of the patterns. So that is a real attribute of the system, I think, in terms of having fairly successful rates of success getting in. But I really love the exits, frankly. I think those are really, really important. And as Michael explained, it really allows you to have the profits run and cut your losses short. And I've just seen over too many trades where those exits really came into play and made a difference, a positive difference in how the trade played out. And you don't have a fear of letting your emotions take over and just grab a profit. You really kind of force yourself to stick with the rules and let the trade play out.
Let's come to the scanning process, Michael. How do you scan the markets for patterns?
So I'm still using the MT4 platform that Gabriel gives us during the workshop. And in the platform, he's got a built-in template of all the different symbols, and it makes it really efficient for scanning. So I just work through the templates that Gabriel's given, and he shows you how to scan. So you go through, there's around, I think, 5 different profiles, and each has different currency pairs, around like I think around 8 each, and or like 8 or 6 each, and I just go through them, changing the time frame. And whenever I see an opportunity, I'd go to the symbol and I would evaluate the trade and see whether I want to take it or not. And the great thing is that if I don't want to take the trade, well, there are so many symbols and opportunities, I can just go back, keep looking, and there'll likely be another opportunity in a few minutes. So yeah, that's how I scan it, and it happens quite quickly as well.
So you're doing the bottom-up scanning approach, right? Where you actually look for the patterns, and when you see a pattern, well, then you're looking at the higher time frames to see if all the rules of the system are fulfilled. That's what you do?
Yeah, and I also combine it with the top-down analysis that we do as well. Gable shows us how to do the top-down analysis, and he provides it sometimes as well as a great example of how to do it properly. And then you combine the higher time frames that you analyze over the weekends to the bottom-up analysis during the day. And if they both like match together, well, you know you have an additional edge because the higher time frames provides great potential, and that's where the greats like R winners, the big R winners, come from.
And the pyramid trades, right? Those that move a long, long way and where you get several patterns in a row in a higher time frame move. And you have taken some pyramids already, right, Michael?
Yeah,
Yeah.
obviously, I think my biggest position has been through pyramids.
Yeah. And Kip, you like as well to trade pyramids, as I remember, right? You like to scale
I
in.
do. Yeah. If I can find that opportunity, I really like to trade them.
Mhm. So which days of the week do you trade, Kip? Do you trade all of the days or?
I started out trading all of the days, and I've found that, as you have indicated in the past, Mondays and Fridays are typically not that good. So I have really confined my active trading days to Tuesday, Wednesday, and Thursday. And sometimes I'll literally sit on my hands on a Monday and forcing myself not to trade just so that I can really give myself a better opportunity on Tuesday. A lot of those Monday trades may look good, but they tend to flatten out and they don't have the same kind of energy. Where starting on a Tuesday, you get a much better feel for the market and things are moving a little bit more. So I have really restricted my trading with a bit of discipline to just Tuesday, Wednesday, and Thursday.
Yeah, Monday tends to be a traps day, right? You get high quality patterns on Monday as well, and then they don't work out well because it's Monday, right? Very few Mondays. I mean, very few do really work, so it's not worth not
I
worth the
learned that for
time.
myself.
Yeah. I think. What about you, Michael? Do you on which days do you focus your trading?
Yeah, same with Kip. I focus on Tuesday to Thursday, and sometimes I might not be able to trade that day, but it doesn't really matter because again, there are loads of opportunities anyway. Sometimes I might trade on Friday if from Thursday there's still potential in the higher time frames, and you can sort of get what's left in a way, and you can make a few nice winners. Or even if late on in the week you haven't meet your weekly yard goal yet, then I think later on in the week does provide some opportunity still. But I try to focus on Tuesday to Thursday.
We've got these 3 core days, right, in the middle of the week, basically, where we focus our trading on to reach our weekly target. So how many, like when you trade, Kip, let's say it's Wednesday and you trade the markets, on average, how many hours do you trade the markets on that given day?
I'm usually here at the desk trading for about 6 hours, sometimes 6 or 7 hours. Typically, again, once the US market closes, then I force myself to quit. But I'm usually dedicated to my desk, and I'm very fortunate. I know for Michael, it's probably not as easy, but for me, I have a full day, and I usually devote 6 or 7 hours to the process.
And how could such a day look like? Are you getting glued in front of the screen for 6, 7 hours, or how? I mean, just to describe how it looks and feels like your day.
No, I try not to get glued to the screen. So I'll take a lot of breaks. I'll set alarms to go ahead and give me indicators as the day proceeds. So I really make a conscious effort not to get glued to the screen. But I do come back quite a bit, and I do spend at least a dedicated 6 or 7 hours, but with lots of breaks and just trying to get away from the screen so that you don't become too connected to the process, which can have some psychological impacts as well.
What about you, Michael? You go to school, right? And you come back. I think then you have a lunch, then you rest probably, and then how many hours on average do you trade per day?
On average, I probably look at the screen maybe an hour and a half to 2 hours a day. But then there are some days when you can feel that the market is like market responsiveness. So that means like the patterns are working really well. When that's really high, well, I'd spend a lot longer looking at the screen. So for example, on the day where I had around over 30 R, I spent around like 5, 6 hours trading. And that was even when I think I had school then as well. But when it works, I allow myself time to really capitalize on that. And when the market maybe is like normal or slightly like weaker, well, then I'm flexible. Like I might have a bit less time and I can do something else. And even applying this amount of like time towards trading, I can still meet the weekly target consistently.
Well, let's talk about, because the weekly target is one of the important 12 key success factors. Having a clear target, right? Trading target in mind. And our target, well, what we put out to the community is that everybody should get the weekly target is 2 hour to achieve 2 hour per week. So if you take a trade and you lose it, well, it's 1 hour. So basically, we want to have 2 hours per week, which is our minimum weekly target, which is actually one of those key success factors. Michael, I think you made the experience, right, that you did not have that target up front. How was your trading? And then when you focus on it, how was your trading then?
So when I didn't focus on it, I wouldn't really be thinking too much about my losses in the way that I was less careful. And for risk management, if I had a loss, fine, I'd keep going and I'd have another loss, but I wasn't thinking strategically. And on the days where things might not be working, I wasn't thinking about not being able to meet the weekly target and instead thinking, how can I make the money back? And when you start thinking about the weekly target, you start thinking, well, I could keep trading. Let's say like I had a loss, you can think that I could keep trading, but maybe if I lose too much, the weekly target won't be achievable later on in the week. So then you might end up saving your energy to end up reaching the weekly target on days where you come back refreshed and in a clearer mental state. So focusing on the weekly target has really helped me to start getting consistency. And as you could see from my results, as of mid-LMP, that's when Gabriel encourages the group to focus on the weekly target. And you can see the difference between the erratic results in the first half and the more consistent ones in the second half.
What impact does the target have for you when you trade, Kip?
The weekly target is actually a big aha moment for me, where the first thing to understand is that that's a very achievable low threshold. So there's not a great deal of pressure on the trader to get to that point, and it can easily be achieved in 1 or 2 trades. But once you have the 2R in pocket, then you have the freedom to trade without necessarily worrying about achieving that. So you start to balance out how the trades look based on where you are in the week and your 2R progress. But it really makes a difference, because then if you achieve that with consistency, that then becomes the goal. For me, it's not necessarily having big R's by the end of the week, but the main goal is to at least get the 2R level and preserve that. Once I have the 2R level, then I'm fairly careful how I trade, not wanting to lose it as well. So it becomes an overall goal, but it's extremely achievable, and it doesn't push you into a position of worrying about achieving it. It's something typically you can achieve fairly easily.
It puts you into the right mental state, right? Not worrying, being relaxed, and as Michael mentioned, not starting to revenge trade or overtrade or even get euphoric, right? And that keeps you at a good level. But you too, you achieve. I mean, this is the minimum weekly algo. Once a trader achieves that, well, we call him consistent, right? And once he can do that like consecutive week after week, well, then it's a successful, consistent trader. I mean, it's really important, because many people think, oh, 2 hours per week, that's not a lot. Well, and then, well, you can make the calculation. The year has 52 weeks, right? If you make 2 hours per week and it gets compounded, well, and 1 hour is 1%, well, you end up making 186% per year. So it's really not more required than 2 hours per week consistently. And with consistency comes then the ability to actually apply leverage, the position sizing. But you too, you not only get to the 2 hour level. I mean, you get weekly R results much higher, like on many weeks, much higher than 2 hour. So once you have achieved the 2 hour level, do you've got another higher level, target level in mind, Kipp?
I really don't. Psychologically, I just let the week play out, get as many patterns as I feel comfortable taking. I don't put that additional pressure on me. I'm happy at the end of the week if I see that that's where it's gone, but I don't apply that additional pressure by setting a new level. My concern is it's so easy to psychologically let the higher level start to frame your reference and not keep to the 2R level, that it can impact your trading. So I just let it flow. Whatever comes, and I'm grateful for anything I get over the 2R.
So let's say you on Wednesday you have already achieved 4 hours, so you're 2 hours above your 2 hour target. Well, then you would monitor that 2 hour, right, and not drop below that by the end of the week. Meaning you can allow yourself 2 consecutive losers, right, and still be consistent, but try to go as high as possible.
Exactly right.
Yeah,
that's how I do it.
So this is what we call the trader strategy. That's another key success factors. Other traders have certain R levels in mind above the 2 hour. What about you, Michael? What happens once you are at and above 2 hour?
Yeah, exactly the same with Kipp, to be honest. Like, as soon, pure focus is reaching 2R whenever you can, and anything above 2R, well, you protect the 2R, and then use I go for the moon. Like, the sky's the limit. You can just keep going, and I keep going carefully. So I don't want to lose what I've got. But if I think that a trade is of good quality, well, then I'll take it, and I won't be too worried if it is a loss. And if it is a loss, well, I've still reached my target. So I just keep going and I focus on the trading. And after 2R, trading becomes, I'd say, a bit more effortless, because there's not too much pressure to achieve 2R, but once it is achieved, it's sort of a feeling of accomplishment that you have achieved consistency, and then you can relax and you can trade more peacefully.
Okay, yeah. As the trader matures more and more, I mean, psychology and mental state becomes really important. I mean, Kipp, you mentioned that before, right? And I know as well that you are using this metaphor of gardening in relation to trading. Could you explain that, please?
Yeah, I should explain that initially, in the first year probably of being involved, I was thinking of trading as surfing. And I don't know, I know it was from one of the other master traders, and it may have been David, but somebody came up with that analogy, and I was using that to really have an idea of how you approach the trading day and take the waves as they come, and selecting the right wave to take, and understanding that the market is a very big force and you're just taking a ride on the waves that come in. Then I gradually shifted to the idea of my trading day being much more like gardening. And part of that was the recognition that you're taking something away from something that's been produced. And so the R's, in effect, are the results of a garden, of a maturing garden, and taking that away. And I found that that's just a really wonderful metaphor for trading. You come to the garden, you take care of it. As the plants develop, you harvest them, and you really are just taking what's provided by nature, sunlight, natural forces. And your job is just to go ahead and see the opportunity and then take it. So the gardening metaphor really helps calm me down. I can go to the garden, I can see how the plants are developing, and the trade being the plants, and then harvest them as the plants develop. And that's a very calming influence for me. And I think it's just a good metaphor, and you can apply it in a lot of different micro areas to trading. And so for me, it's a great way of just approaching each day and understanding that I'm going there to relax, be cool, calm, and collected in the process, and just enjoy the time spent in the garden.
Yeah, when trading, it's really important to be in a very good trading mental state for trading, right? Which is quite different from a mental state you had with your law practice, right? Or you have in school. So this is part of the learning, right? Developing as a great trader to actually find this ideal mental trading state, and it's actually quite individual for each person. Well, let's come to the ups and downs in the markets, or as well in the trader development, because we talk as well about the boom and bust cycles as we develop as traders, so that the emotional dips out of which we come strengthened, right? Michael, you already mentioned your best day. I think it was a 35 or 33-hour day, right? That was your best day, well, which is fantastic. I mean, it's way above 2 hour. Our monthly target is 5 hour. So it basically reaches, you've reached the 6 month minimum target, right? Within a day. But what was your worst experience so far?
Good question. My worst experience, I'd say probably would be at the start of LMP. I had I think around maybe 6 losses in a row, perhaps in that from the first week going on to week 2. And those losses, some of them came from FOMO, some of them were just routine losses. And I think that when you're at a stage where you don't know why you were wrong, then that's not so good. But then because you're here, I asked Gabriel, what do you think about the trade? And he does his evaluation and posts it on the group. And then you realize, oh, like, actually, you either didn't know about what Gabriel commented, or you just didn't see it. And it gives you a really good chance to review and learn from what Gabriel says. So I think when you're in that sort of when you're in that bust moment, then I think having guidance from someone who's more experienced is really useful. And then you start to come out of that and develop into like your own independent trader.
So you mentioned LMP. So LMP is the Live Markets Pro program. This is when we approach the live markets in a very structured way. And before that, we've got the simulation, the boot camp, the trader simulation program, which is just before LMP. What about you, Kipp? Do you remember what was your best day or your best week?
I do, but not necessarily. It doesn't necessarily stand out. Again, the R's I look at as being, they come as they do, and I don't focus on it too much. I can definitely remember the times when I was going through a difficult transition and really going from boot camp to LMP. I can remember that as being a little bit difficult in trading the live markets. And then I distinctly remember a bump when you start to trade with real money in a real money account. And placing those trades and handling all of the technical issues that need to be implemented as you do live trading, there was another clear bump there. And so those were areas where I had to kind of overcome those just through persistence and patience. But you get through those, but definitely I remember those periods.
Let's come to personality traits. What do you think, like in general, what do you think are important personality traits of successful traders, Michael?
Well, I think a good trader is very patient. I think a good trader has to be determined to sort of to keep going even through the bust cycles. And all of these skills, they can be learned. Like for example, at the start, I wasn't so patient, but then you develop patience through experience. I also think I feel like I'm quite a visual person. Whenever I'm learning, I always prefer to see something rather than maybe people prefer to like hear, or there are different learning types. And I reckon that for me, that was sort of an edge which made me like be able to learn perhaps slightly faster. But I think all the skills that are needed to be a successful trader, they're easily learned and picked up. And in your key success factors, I think you've covered most of the things there which you need to be a successful trader.
What about you, Kip? What stands out for you?
Yeah, I agree with Michael. Patience is a big factor. Persistence is important too, to move forward and keep pushing yourself forward to learn and to gradually take these next steps to eventually get to real money account trading. But I also think that just openness and a sense of humbleness is really important as well. So many traders come in as type A personalities, and their first impulse is to get all the technical things right and implementation. But at the end of the day, part of this is really just about calming down and taking a humble approach to the market and letting the trades develop and come to you and recognizing the patterns, and then you can go ahead with the implementation. But if you are trying to force it with a type A personality, there's a lot of tendency to have fear of missing out and to force trades that really aren't the ideal patterns. So I think just being humble and letting the markets develop for you is a really important trait as well.
There's this saying that the markets teach humility, right? Especially to those that are not sufficient humble, who think they know everything or can control the market. But that's a great learning too. The mission of our community is to develop successful, consistent traders within less than a year. Well, that's a very short time span, right? Especially if you think that traders can sit trading the markets for 5 or 10 years without making measurable progress, right? Do you think it's possible to achieve that, to be successful and consistent within less than a year, Kip?
Well, I think Michael's an example of that, certainly. I definitely think it is. A lot depends on your own personal lifestyle and what's going on in your own life. But I think for a persistent trader who's really dedicated to the process, it's very, very possible to do that. I took a little bit more time to develop to get to the live trading and to the real money account. But I certainly think that if you devote yourself to the process, it could certainly be done within less than a year. And I think a lot of that really has to do with the deep practice process that you encourage traders to go through. That really speeds things up.
Mm-hmm. So the simulator and deep practice, right? What about the group? Because we basically do that in a school type of way, right? Like we meet all, go through the workshop, and then from there it continues with follow-up programs. How important is the group, Kip?
I think it's really important. And what I've really found for me personally was continuing on into the master's journey program after completing LMP. And the reason for that is, again, it's focused on psychology. We're focused on particular areas. We have these meetings about once a month. And it's really helpful to hear other traders talk about some of these issues that we focus on. And again, I really believe that traders are trading their beliefs. They're not trading necessarily the markets. And so if you can master those psychology issues, you're really going to be able to be much more successful over the long term.
What about you, Michael? I mean, how much did the group help you in boot camp and LNP?
Yeah, the group is amazing. Like they're all great, and I think that they're really good encouragement for when things aren't so good, and you sort of watch everybody go through the same thing as you go through, and at some point, maybe they're slightly different points, but everyone ends up experiencing something quite similar to each other, and the process is actually relatively similar. And I think everyone in the group is really supportive, and they really do help you. Like for those that are perhaps have already experienced things, they do help you a lot. And I also think it's great meeting new people as well, because you got people from all over the world from different backgrounds, and you learn so much from the different people that you talk to. So I guess I feel like I'm quite grateful at my age, already being 17, being able to talk to many different people of different professions and different countries around the world. Just having them like on my phone to talk to, and not only being great support for trading, but for life as well.
And you are at the beginning of your active business life. How do you want to use trading in in the next 10, 20, 30 years going forward? I think I forgot to ask you in the beginning.
Yeah, so right now my focus is just on consistency, which I feel like, well, over the past few months, like I have got that, and I want to continue using trading to try to get as a stable, like try to get stable money coming in through my prop firm account, and I want to use that to be able to fund any future business ideas that I want to do, and perhaps real estate as well. And I think that everything that's going on in the world right now, you had COVID with the lockdown, and perhaps even like the Ukraine war, things aren't so stable, and perhaps normal jobs, you can have another lockdown or anything can happen. But with the things that you learn from trading, no one can take that away. And you always have this knowledge within you. And I think it's a great way of being able to make money wherever you are once you've achieved consistency. So that's how I plan on using it.
The trading is like riding a bicycle. Once you learn it, well, you never unlearn it. That's a great thing about it. And you can even do it like when you're very old, right? So that's a nice thing, yeah. Kip, what about you? I mean, we all have busy lives, right? We don't only trade, we've got other things. I think you've got a big family as well. How do you organize your life around trading, or trading around your life? Because that's an issue that comes up with a lot of people.
Yeah, I think in that regard, I think it's really important to look at your whole life plan and what's going on in your life, and particularly if you have a significant other, to really have them be on board with the journey that you're taking, whether it's the time commitment or just the process that you're going through, having them understand and go on that journey as well. And so you have to work the trading around the fixed issues in your life, whether it's work or school or whatever. I'm fortunate because of retirement, but I don't want trading to just completely wipe out everything else in my life. So you have to strike a work-life balance. And I've been very fortunate having a wife that supports me, but you have to figure that process out, and even having a discussion with your family or friends about trading and what it means to be a trader is an interesting discussion, because a lot of times the other people don't really understand what's really involved, and they have preconceived notions of what trading involves, and that usually leans towards gambling. So you have to kind of moderate and deal with that as well. But I think it's really important to have the work-life balance, and that's something I still struggle with a little bit, but I think for all traders, we face that issue.
And it's great to have this 2 hour per week target, right? Because one good trade per week is enough. So it doesn't actually puts us too much under pressure when we cannot when we only trade 1 or 2 days per week, right? We can still get it. And if we don't get it, well then we go for the next week to reach the target. And any tips for someone starting out to trade, Michael, like thinking about your friends at school? What would you recommend them?
Well, before the workshop, we got given some prep work by Gabriel, and we got given some guidance. And I think that included different books to read or just tasks to understand the basics of trading. So anyone starting trading, I think it's really important to make sure you're learning from somewhere that's reliable and somewhere that's trustworthy. I think a great website is called Baby Pips. You have like the basics of trading where you can understand just the terminology of it. And I found that really helpful. And I think also from learning from somebody that has a proven track record of producing great traders, it's just like tennis. Like I played quite a lot of tennis before this trading. And if you have a good coach, well, they'll steer you in the right direction. So I think the most important thing is, as well as putting in the effort of learning the basics yourself, finding somebody that's going to put you in that right direction, I think is really the most important, and spending time to find somebody that really does care about your progress.
Are there any don'ts that come to your mind?
And say don't go in thinking that it's easy, and don't go in with a real money account straight away and just try to trade, because well, you will understand after that that that's not the case, but it's great to not lose money. So I wouldn't do that. Just start by educating yourself, learning the basics, trying to find somebody that can coach you through the different stages. And I'd say if you stick to that and you have a solid plan of how to get to where you want to go, then you're set up for success.
It's one of the top 10 trader challenges, right? Wanting to trade the live market right away with a real money account. That's clearly a don't. Yeah. What about you, Kip? What would you recommend someone maybe of your age group if they wanted to start trading?
Well, I would echo everything that Michael said. I think finding a mentor is really critical, and finding a good companionship in a group that also trades the similar system. The other thing I would really add as a don't, however, though, is there's a tendency for a lot of traders to jump around. They'll look at one system, it doesn't quite work right away, and then they jump to another system, and they're constantly system shopping. So I really advocate for people to find somebody that they trust as a mentor, and find a community, and then really give it time and persistence to let it work out, and develop your own psychology in that process. But you have to be patient with it. You really do.
Right. What's coming up next? What are your goals and aspirations for the coming years, Kip?
For me, I'm working still on consistency, but it's really now a matter of position sizing. So in my accounts, I'm gradually increasing the position size, and that's a slow process. And I've worked out a system that I feel comfortable with in terms of developing that. But it's really a matter of increasing the position size to increase the return. And I'm doing that carefully and slowly with both accounts. And I have a separate account for futures and a separate account for Forex. So my main goal is increasing those position sizes. And then also really what I'm looking for on the longer term is work-life balance, which includes not only the mental aspect, health aspect, exercise, and psychology, and even spiritual. So I'm looking for that balance as I'm heading through my retirement years. And so the spiritual side is also an important part of this process that helps augment the psychology part. So I'm just looking for balance, and I'm hoping to get, to a point where I can trade through my 70s. And part of this is the mental acuity that I think you have to trade. And I'm hoping that that will help maintain mental acuity as I get into the more advanced age stages.
What about you, Michael? You're still young, but you sure have a lot of aspirations and goals.
Yeah, well, for me, like only doing it for 5 months, I've still got a lot to learn, I think. And that a lot to learn is really the psychology. But I think I really want to try gaining consistency on a real money account, which is what I'm working on right now. And then in the future, hopefully next year, try to increase the account size. And I want to aim to be on the FTMO leaderboards, and to try to build a track record of myself and just to keep getting consistent returns and just keep going for the moon in a way.
Okay, fantastic. Right. Well, we've come to the end. I think it was very, very interesting, enlightening, and thanks a lot for having taken your time. Thank you.
Thanks
Thank
for
you.
having me.